Welcome back to The Explainer, where we break down the complex forces moving our world. And today, we're diving into a day on Wall Street that truly, completely defied gravity. I mean, think about it. What if the absolute worst news you could imagine actually caused a record-breaking rally? That sounds nuts, right? But that's exactly what we saw. The day started with this perfect storm of negative headlines, the kind of stuff that should have sent stocks into a nosedive. But the market did the exact opposite.
So let's set the scene here. The morning kicked off with what seriously looked like a perfect storm for investors. We're talking one bombshell after another, all coming straight out of Washington.
First up, and this is a big one, in a move that is pretty much unheard of, the Department of Justice launches a criminal investigation into the sitting head of the Federal Reserve. I mean, wow. Right away, this threw the central bank's independence into question and just sent this huge shockwave of uncertainty through the entire system. And then, as if that wasn't enough to chew on, we get this proposal that takes direct aim at the financial sector's lifeblood, a potential 10% cap on credit card interest rates. You can just imagine the panic. This immediately threatened the profits of some of the biggest banks in the country. And just to really top it all off, geopolitical tensions just went through the roof. News breaks that the U.S. is mulling over military action in Iran and, at the same time, threatening this massive 25% tariff on anyone trading with them. It was literally a trifecta of terrible, terrible news. So, with all that swirling around, you'd think, okay, this is going to be a massive Sell America day, right? But what happened next? Well, it was absolutely stunning. And this is where the story gets really, really interesting. This slide just nails the core paradox of the day. On one side, you've got this laundry list of incredibly scary headlines. And on the other, the fearless reality. The S&P 500 didn't just hang on. It blasted to a new all-time high. I mean, how on earth is that even possible? And look, this wasn't just a tiny little bump. We're talking brand new historical records for both the S&P and the Dow. And the Russell 2000, which tracks all those smaller companies, it was up even more, notching its 7th straight day of gains. This was a broad, seriously powerful rally. So, what was going on here? What was this incredibly powerful engine that let the market just sail right through this political hurricane? Well, the answer wasn't in the scary headlines from Washington. Nope. It was in the economic fundamentals on the ground. First and foremost, the sheer raw power of the U.S. economy. The Atlanta Fed drops this forecast projecting a blistering 5.1% GDP growth rate. Just that one number, it provided this incredible bedrock of confidence. It was basically signaling what they call a no-landing scenario. This idea that the economy could just skip a recession entirely and keep on roaring ahead. And here's where it gets even more interesting. We're seeing artificial intelligence move from just, abstract hype to something tangible, something that creates real value. You've got Google and Apple partnering up, which sent Alphabet's market cap soaring past $4 trillion. Then you have NVIDIA and Eli Lilly dropping $1 billion into AI-powered drug discovery. These are massive, long-term growth stories that were just too powerful for investors to ignore, even with all that short-term political chaos. And this wasn't just a story about a handful of mega-cap tech stocks. Like we saw with the Russell 2000, the strength was widespread. Small and mid-sized companies were getting in on the action too. And that's always a key sign of a really healthy, confident market. Okay, so this wild environment where politics and economics are pulling in completely opposite directions, it created some very clear winners and some very clear losers. And the split was just crystal clear. On one hand, you had consumer staples, led by Walmart's huge surge after getting into the NASDAQ 100. They basically acted as a defensive safe haven, jumping over 1.4%. But on the flip side, financials fell almost a full percent, dragged down by all those fears about that proposed cap on credit card rates. So if you're an aggressive investor, the strategy seems pretty clear. You lean into what's working. You focus on the big tech companies where AI is actually translating into real money, and you ride that momentum. The huge risk, though, it's that the political dogfight between the White House and the Fed could spill over, cause a sudden spike in bond yields, and just hammer those tech valuations. Now, if you're feeling a bit more cautious, the strategy completely shifts. It's all about looking beyond the U.S., maybe into some international markets that aren't as expensive, and holding on to tangible assets, like gold, as a kind of safe harbor against all this political and geopolitical mess. All right, so let's put it all together. What does this all really mean? How are we supposed to make sense of this incredible clash between politics and the economy? When you boil it all down, the day was a battle between two incredibly powerful opposing forces. On one side, you had these undeniable tailwinds of a booming economy and game-changing corporate innovation. And on the other, you had the headwinds of political chaos, regulatory threats, and global crises. For one day at least, those tailwinds won, and they won big. I think the best way to picture it is like this. The market was this massive cruise ship, right? But it was equipped with a jet engine. That's the economy and all those corporate earnings. And it was sailing straight through the middle of a political hurricane. The captain might have been under attack, sure. But the passengers on board, they trusted the ship's powerful engine way more than they feared the storm raging outside. And that leaves us with a really provocative question, doesn't it? If an investigation into the Fed chair, threats of new regulations, and new trade wars, if all of that was just noise that the market could just shrug off, what's the real signal we should all be watching for? What's the one thing that could actually sink this ship?